topic of the study is Evolving Role of Gold in Crisis with special reference to India, evidence from asset linkage and policy intervention. Here, I would like to introduce the topic. Here, I just found out the role of gold in crisis in India with respect to stock market, and policy intervention here means whether introduction of some financialization tools has changed the role of gold in India. This is the outline of the presentation, and starting with the need of the investors. Investors have multiple sort of needs, which includes capital preservation, portfolio management and risk management. Gold it doesn't need an introduction, but it is it meet the needs of it has the potential to meet the needs of the investors, preserve capital through acting as inflation hedge and currency hedge, and it also acts as a risk management tool, and also it will manage the portfolio. And it is distinct from other investment assets, including equities and other commodities in many ways. Coming to the issue, for the past few decades, we are facing a series of crises. So in this, such episodes can impact the financial market by increasing the volatility and also creating contagion effects. So in this, but the gold price is showing attended strength, and it is a motivation for the researcher. And this crisis can change the relationship between assets, interlinkage between assets. This that will in turn reduce the diversification benefit. Also, recent decades have been witnessing financialization process. More and more investors are coming into the market, and new products are introduced in the market. So these also can change the linkage between assets, including gold and other assets. So whether these process, crisis and financialization has changed the role of gold in India is main issue that should be addressed. And a review of literature has been conducted, and it was found that the literature on this particular area, especially the role of gold as hedge, safe haven and diversifier, is in the rapid growth stage, and it is an area with a high relevance, and it need further development. And these are the theories associated with the role of gold during crisis. And coming to the research gap, as most of the studies are focusing on countries where the role of gold is investment. The gold is mostly used as investment product, but usually, but in countries where consumption is high, the studies is very less. So studies are very less. So there is a need to focus more on consumption-oriented countries. Also, the existing findings are mixed and contradictory, and most of the inconsistencies due to the econometric tools used, limitation of the econometric tools used in the study. So there is a scope for using advanced and novel methodology, and also financialization tools are can determine the role of gold, but there is scarce empirical evidence in this regard. So this is the concept map. Here, hedge means an asset that is negatively or uncorrelated with other asset on average, and diversifier means an asset that is positively correlated with other asset on average or during the period of crisis, and safe haven is an asset that is uncorrelated or negatively correlated with other asset during the period of crisis. So these are the working definition. Here in the previous literature, the role of gold is divided into hedge, safe haven and diversifier, but the present literature divided the diversifier role into market follower and contagious. Market follower is an asset if the assets have negative or uncorrelated relationship during on average, then it is market follower. If it is on crisis period, then it is contagious. So coming to the statement of the problem, emerging markets like emerging gold consuming market like India is in the process of de-incentivizing the household gold holding. So in this process, it is essential to understand what is the role of gold, especially during crisis. Then it will motivate the investors to carry more trade on gold. And also the external events and internal events like crisis and financialization can change this role. So risk management strategies during these two episodes are very important. So identification of safe haven assets and hedge assets is important, and here comes the importance of checking the viability of gold as investment asset. So these are the objectives: to identify the role of gold during crisis in India, to examine the effect of crisis in changing the role of gold based on severity and phases of crisis, and to examine the effect of financialization tools in changing the role of gold in India. Here research design is quantitative, country is India, variable selected are gold price in Indian rupees and daily BSE Sensex price, both are converted into return. Period of study is 22 years from 2000 to 2022, and in order to analyze the effect of crisis in changing the role of gold, an autoregressive distributed lag model was fitted, and it was a model with the dummy and without dummy was fitted. And again another model, ARDL model with the financialization tools as dummy variable is fitted. A model with and without dummies was fitted. And regarding role of gold during crisis in India, the crisis period was identified using Pagan-Sosanoff algorithm 2003, and based on that extreme stock market falls were identified, and these falls are matched with the literature to identify the crisis period. Selected crises are dot-com bubble crisis, global financial crisis, European debt crisis, Chinese stock market crash, and COVID-19 crisis. Regarding the role of gold in India, like that of emerging market, gold plays a minor or weaker role in a country like India compared to global market. And this role is almost consistent throughout the crisis period except COVID-19. During COVID-19, it acts as strong contagious. This means it has positive relationship with the stock market compared to other crisis period. So this may be this is consistent with the literature, but this may be the literature attributes this change in role is due to the optimistic behavior of the investors about this crisis, COVID-19 crisis, and also the alternatives available for investment during the period of crisis. Then again, in the long run, also the role is same except for global financial crisis and European debt crisis. If in the long run, the nearby crisis changed the role of gold. And regarding the effect of crisis in changing the role of gold in India on the basis of severity and phases of crisis, it was found that when the stock market return is at extreme stage, that means return distribution is at extreme, then the role of gold changed from degraded to diverse contagious asset from safe haven asset. So this is almost common in all crises except Chinese stock market crash. And regarding phases of crisis, during pre-crisis period, the role of gold is almost weak. It is acting as a weak hedge, and post-crisis period, during some crisis, the role is strengthening. This shows that on the long run there is changes in the role of gold compared to short run. More changes in role of gold is happening in the long run. Regarding the effect of financialization tools, it was found that gold there is an effect effect is significant, and that is more visible in the case of gold futures. Gold futures changes the role from role of gold from hedge to market follower, whereas other gold ETF and digital gold is acting as investment asset. All others are acting as acting like financial asset. So it depends on the question is whether to consider gold as an alternative investment asset or whether to consider it is a financial asset. So it depends, the decisions of policymakers will depends on that question. So the major findings are gold plays minor role as safe haven asset in India during crisis, and gold acts as alternative investment asset in India during normal fluctuation. The role of gold has evolved into contagious asset during COVID-19, and the role of gold is degraded to contagious asset during extreme stock market shocks, and the changes in role of gold during different phases is more apparent in long run. Gold derivatives, gold mutual fund, and gold monetization scheme increase the co-movement between gold and stock market. So the suggestions are investors may introduce gold in their portfolio to diversify their portfolio risk to a greater extent for value protection during COVID-19 crisis. It is advisable to allocate gold ETF to the portfolio because this instrument did not intensify the correlation between gold and stock. Policymakers have to take appropriate measure to strengthen the role of gold during crisis, and policymakers have to integrate the potential shock, volatility and transmission in stock market to regulatory policy design for gold market, particularly during crisis. Scope for future research, whether the shift in role of gold during COVID-19 is because of the crisis itself or because of structural change, that should be investigated further, and the potential reason for weak safe haven role in India, that should be there is no empirical evidence on this regard, and the impact of financialization tools in changing the role of gold during crisis can be evaluated. Also, this study can be extended to different contexts and time periods. Thank you.
So, thank you. That's a heck of a lot of work. Can we go back to 3 slides where you showed the one before that? This one, major findings. The one after this. Yeah. Now, what is your definition of weak safe haven and strong safe haven?
It depends upon the significance of the coefficient. If the coefficient is significant, it means strong. The relationship is strong. If it is weak, it is not stable.
And how have you defined alternative investment asset and the other findings also, if you just go down? What is a contagious asset?
Contagious asset means an asset that co-move with the other asset. Positive relationship with it.
Positive correlation.
Positive correlation.
Okay. Any other questions?
I think this word is inappropriate, the contagious here, because it should not be contagious. If there is positive correlation between the stock market and gold, then gold has the safe investment property. And when we talk of contagion, it means the negative spillovers or the downside market gets transmitted. So I think it should be, the word should not be contagious here. It should be as...
I'm inclined to agree. I think you are using the words differently than is normally used in the literature. But let there be a substantive question rather than a terminological question.
As Sir has mentioned, I also had similar kind of a thing. There is a proper definition of what is a safe haven asset, what is a contagious asset. Please
I
have
have
a look at
provided,
that.
but
Yeah.
I
Yeah.
don't have,
Another
do
thing
not
is
have time to read that, so I skipped that.
Yeah, that's okay. I mean, there's a lot of work over there. And my only suggestion is that actually over here, for greater clarity, you might want to have two different papers. I think you can divide it into two different papers. And as you work further on this paper, you
Actually,
should
it
kind
is
of
part of my research work.
Ah.
I am making a study between India and China. This role of gold in India and China, along with the financialization. So
So
it
I
is
would
a part.
encourage you to, basically follow what both these people have said. Adil and what was your name? Parumita. She's our presenter. Um, to be a little bit more careful about these words that you're using, and also maybe each one is a separate topic by itself. That during a period of extreme volatility or dropping, is gold a safe haven asset or not?
Yes.
Whether there is a correlation or not. I mean, so there's a heck of a lot of work, but one needs to
More clarity.
structure it in a more in a fashion that makes it a little more better flow in the narrative essentially.
Okay, sir.
But thank you for your time. I think we are really running over.